So good morning, all of you. Yesterday we did lot of income tax in just 2 sessions. So basics of income tax we started. We understood there are 5 heads of income: salaries, HP, profits and gains from business profession, capital gains, and income from other sources. These are the 5 heads of income. Now what happens when we take total of these 5 heads of income and we do clubbing of income and set off and carry forward of losses? When we do this, we get gross total income. From gross total income, we minus deductions of chapter 6A under section 80C to 80U. When we minus those deductions, we are going to get total income. On total income, we calculate tax. To calculate tax, your income can have two things. Your incomes can have some, special incomes, and your incomes can have some balance income. So special incomes will be taxed at special rates of income tax given in the Income Tax Act, like winning from lotteries, card games, puzzles, long-term capital gain, short-term capital gain. These all will be taxed at rates given in the Income Tax Act. But balance income will be taxed as per slabs as far as individual is concerned. We are discussing about individual mainly. So when I talk about slabs, then there are two ways of paying tax for individual. One is 115 BAC, that is a new regime, and one is alternative. This actually new regime was earlier called as alternative tax regime, but now that itself has become main default, and you may opt out of default. So in 115 BAC, the rates of tax are expected to be low. The rates of tax are low in 115 BAC. Getting it? What are the rates of tax? But many things are disallowed. Many things are not allowed. Many deductions are not allowed in 115 BAC. Like most of the 80C to 80U deductions will not be allowed. And you will see as we go ahead in each head of income what is not allowed if you are going for 115 BAC. But slabs you have understood. 0 to 3 lakhs, no tax. For income between 3 lakh to 7 lakh, tax at 5%, 7 lakh to 10 lakh, 10%, 10 lakh to 12 lakhs, 15%, 12 lakh to 15 lakhs, tax is at 20%, and above 15 lakhs, tax 30%. So you understood this is slabs. It works in slabs. For income which fall in this category, that particular amount of tax is payable. Okay, so yesterday we handled those slabs. If you are out of 115 BAC, then what happens? Then you have to pay depending on the age of the assessee. Mind you, if he is resident senior citizen means age is 60 or more than 60. Then what happens? Then 0 to 3 lakhs, no tax. Resident senior citizen, na? So 0 to 3 lakhs, no tax. 3 lakh to 5 lakhs, 5 lakhs to 10 lakhs. Now 3 lakhs to 5 lakhs, tax is at 5%. 5 lakh to 10 lakhs, 20%. Above 10 lakhs, 30%. Resident super senior citizen means age is 80 or more than 80. 0 to 5 lakhs, no tax. 5 lakhs to 10 lakhs, 5 lakhs to 10 lakhs is 20%, and above 10 lakhs 30%. And if I am neither of them, I am falling in other category. It could be non-resident whose age could be anything, or it could be resident whose age is up to 60. In that case, 0 to 2.5 lakhs, no tax. 2.5 lakhs to 5 lakhs, 5%. 5 lakhs to 10 lakhs, 20%, and above 10 lakhs 30%. Then you understood that income tax follows progressive taxation. Higher the income, higher is the rate of tax. Now to further give way to that progressive taxation, there is a concept of surcharge. Surcharge means tax on tax. So what are the surcharge rates? If I talk about surcharge rate for that person who is opting out of 115 BAC. Suppose opting out of 115 BAC, then surcharge are high. That's how I have to keep in mind. If total income is between 50 lakh to 1 crore, 10%, 1 crore to 2 crore, 15%, and I'm saying opting out of 115 BAC. So 2 crore to 5 crore, 25%, above 5 crore, 37%. And if I am in 115 BAC, then rate of tax is marginally less. So surcharge is not there at 37%. When it is above 2 CR, it is 25%. The last category of 37% does not exist. Clear till this? So far so good. Then whatever is your subtotal, means tax plus surcharge, that subtotal will be increased by health and education cess at the rate of 4%. If no surcharge is applicable, then only your tax will be increased by health and education cess at 4%. Further, if your income is marginally exceeding, means just exceeding 50 lakhs, or just exceeding 1 crore, or just exceeding 2 crore, or just exceeding 5 crore in case opting out of 115 BAC. That means because of this income just exceeding, what becomes applicable? Surcharge becomes applicable. Then there is a concept of marginal relief. So yesterday we have done a lot of examples on this. So all these things which I told you, we discussed yesterday. We have done a lot of examples on this. Now today, let us see the fresh concept of rebate. Rebate means discount. So yesterday while ending the session, I had told you that first and foremost we have to do is rebate. So give the heading rebate. Rebate under section 87A. Rebate under section 87A of Income Tax Act. Rebate means discount. Now understand, like you have been asked to pay extra tax on tax in case your income was extremely high. Then in opposite way, you are given rebate also if your income is less. So what is this rebate when it is given? So rebate under 87A, in both circumstances we will check. So which both circumstances? If I am in 115 BAC or asset is shifting, opting to shift out, or you can say shifting out of section 115 BAC. In both cases, rebate will be applicable. In 115 BAC, rebate is applicable if total income, is less than or equal to rupees 7 lakh. If total income is less than or equal to rupees 7 lakh, rebate is applicable. Here, if total income is less than or equal to rupees 5 lakhs. So if I am in default regime of 115 BAC, this discount rebate which we are discussing will become applicable if total income is up to 7 lakhs. How much is the rebate? Understand, tax payable or rupees 25,000, whichever is lower, that much will be your rebate. Means your rebate cannot exceed 25,000. And if you are in this side means if you are opting out of 115 BAC, then tax payable or 12,500. Again, whichever is lower, because this is your rebate. In short, idea is that your tax payable should become zero if your total income is up to 7 lakhs in 115 BAC, and if it is up to rupees 5 lakhs when you are opting out of 115 BAC. That is the whole idea. Okay, that is the whole idea. That's why, when budget is presented, finance minister says that the advertising is like this, that we are not taxing anyone up to 7 lakh. It doesn't mean that 7 lakh is basic exemption limit. If your income is 8 lakhs, then you have nothing to do with rebate. It's not like 0 to 7 lakh, no tax. 0 to 3 lakh, no tax. 3 lakh to 7 lakh, tax is at 5%. So if your income is 8 lakh, that means it is above this 7 lakh. You apply all the slabs. Apply all the slabs means 3 to 7 lakhs, calculate at 5% and pay it. So idea is not that basic exemption limit is 7 lakh. That is not the idea. I hope you are getting it. Idea is that if your total income is up to 7 lakh, then your tax payable should be nil. That is the idea. But if your income is say 10 lakhs, then calculate tax on income between 3 to 7 lakh also. That is the idea. You will not get any rebate if your income exceeds 7 lakhs. That is the point. But in parliament, unfortunately, it is presented like it is a basic exemption limit. Each time it is presented like that. This time also I was seeing budget speech. Ma'am said that we are not taxing anyone up to 12 lakhs. Now this is fine. I mean, that is not false. But terms and conditions apply. It's like you are getting free shirt there. One shirt free. But for that you have to buy two. Means you are just marketing it that way. So common man always feels that no tax on first this much amount. It's not like that. Basic exemption limit is different and limit for rebate is different. You will understand now. See the examples. We will cover 3 examples for this. All of you with me? There is an individual. Okay, by the way, who gets rebate? Who gets rebate? Resident individual. Resident individual. No one else. There is an individual whose age is 26. Whose age is 26. He is resident. He is resident. He has total income. He has total income of 6,50,000. Okay, which has salary, FD interest, and all those things. That's not important. Total income is 6,50,000. Needless to say, what you have to do, you have to compute tax liability. You have to compute tax liability for AY 25-26. And now I will not tell you that rebate to will automatically apply. But one thing I should tell you, you have to pay tax under default tax regime. Okay, so all required information, you have got it. Looking at this, you should understand tax payable is going to become 0 because income is not exceeding 7 lakhs. But let's now formally work out how it is going to be 0. So write down computation of tax liability of individual assessee for AY. I'm just telling you exam presentation systematically for AY 25 26 relevant to PY. Yes, relevant to PY 24-25. Clear exam presentation. Particulars amount in terms of rupees. So in next question, even if I don't do presentation like this, you should do particulars amount in terms of rupees. A point, rupees 0 to rupees 3 lakhs, nil. B point, rupees 3 lakh to rupees 7 lakh. But how much you have? I heard someone, no, I heard someone saying 3 lakh to 5 lakh, 3 lakh to 7 lakh. We are in, sorry, we are in 115 BSc. We are in default regime now. We are in 115 BSc. Please understand. So age and all does not matter. So in fact, while giving heading, you should give the heading. Tax payable under section 115 BSc. That heading also you should give. So yes, 3 lakh to 7 lakh. How much you have between that? Actually, your income is 6 lakh 50,000. So do 6 lakh 50,000 minus 3 lakh into 5%. How much? 17,500. So your total is 17,500. Now go for rebate. How will you go for rebate? D point less rebate under section 87A. That will be lower of what? Lower of tax payable, which is 17,500, or yes, 25,000. Yes. So net tax payable 0. Therefore, tax payable, final tax payable will be nil. Cess should be added after subtracting rebate. Getting it? So don't add in 17,500. First subtract rebate, then seek to add cess. Like surcharge, first you are adding surcharge, then considering health and education cess. So health and education cess is last thing. Any doubt? Can I give you next example? Next is very interesting example. It happens only for 115 BSc rebate. You should keep in mind what I am telling you. Your income just exceeded 7 lakh. Your income just exceeded 7 lakhs. What happened? Because of that, you lost your opportunity of taking rebate. because rebate opportunity is there only if your total income is up to 7 lakhs. It just exceeded 7 lakhs. So now you will be given rebate. Still you will be given some rebate. So see, the second example is for that. Okay. So relief for claiming rebate. Point is relief for claiming rebate if total income just exceeds what? 7 lakhs. But this type of facility is not available for 5 lakh rupees rebate. Means this facility is not available for rebate when you are opting to shift out of 115 BSc. In that regime, this is not available. So, with example, I will explain you. Individual resident age 35, anyways not important. Total income, friends, total income 7 lakh 15,000. Can you see? It is exceeding 7 lakh by 15,000. 7 lakh 15,000. Compute tax. For, of course, whatever is happening is for AY 25-26. Yesterday these basics are clear, na? That which AY is applicable, which PY is applicable. Yes. Shall we check? Done. Follow the following steps. Okay. First step, compute your what is your total income in excess of 7 lakh? What is your total income above rupees 7 lakh? So it is 7 lakh 15,000 less 7 lakh, which is 15,000. All problem is because of this 15,000. Calculate step 2, tax on rupees. Calculate tax on rupees 7 lakh 15,000. Can you calculate tax on 7 lakh 15,000? As usual. So 0 to 3 lakh no tax, 3 lakh to 7 lakh tax at 5%. What is that? On that 4 lakh at 5%, 20,000. And between 7 lakh to 10 lakh tax at 10%. So basically 15,000 you have. 7 lakh 15,000 minus 7 lakh. On 15,000 at 10%, it's going to be 1,500. So you are getting 21,500. So do you agree? Because of this 15,000 extra, you are needing to pay 21,500. Because of this 15,000, you are needing to pay 21,500. So better you pay that full 15,000. Ask government to take that full 15,000 which exceeds 7 lakh. So your income will come down to 7 lakh. So pay that full 15,000. Means what? Now go ahead and take your step 3. You will get rebate in short. What rebate you will get? No need to pay full 21,500. You will get rebate. Why you are getting rebate? as B is greater than A. B is greater than A means if you call this as B, if you call this as A, then B is greater than A. Means your tax on 7,15,000 is coming to be greater than the income which is exceeding 7 lakhs. So what's happening? Since B is greater than A, rebate would apply. Rebate under section 87A would be B minus A. B minus A. What is that? 6,500 you will get rebate finally. What you did is 21,500 minus 15,000. This much you will get rebate. So in short, effectively you will end up paying 15,000. Therefore, tax payable. So tax payable will be 15,000. But of course, add health and education cess at 4%. I think that would be 600. So 15,600 is your final tax liability. Clear? So this is unique situation in which rebate will apply in this fashion. Sorry? No, no. The difference between total income which exceeds 7 lakh. Yes, yes, yes. Because you are willing to pay that much. Yes, because you are willing to pay that full amount. No? Okay. Now, next example. Next example. Next example is on your issue of when you're opting to shift out. When you're opting to shift out. So, individual age here will matter now. 35 years. Of course, resident in India. What is resident, non-resident? You'll understand as we go ahead. But as of now, just understand resident will have to pay tax on everything in India. He might be earning within India, he might be earning outside India. He will have to pay tax in India. Okay. Total income 4,15,000. What is the total income? 4,15,000. Of course, you have to compute tax liability for AY 25-26. Can we? Shall we calculate? Let's see. So, A point 0 to, see the age is 35. So, 0 to 2.5 lakhs. 2.5 lakhs to 5 lakhs at 5%. But you have it as 4,15,000, isn't it? So 4,15,000 minus 2,50,000 into 5%. How much? How? How much? 8,250. It's not final 5 lakh, na? It is 4,15,000, na? Got it, Asma? 8250. Now you go ahead. You will get 8250 as tax. Then you go for rebate under section 87A. That will be lower of 2. What 2? Tax payable, which is 8250, or the amount specified. What is the amount specified here? 12,500. So you will get 8250. Can you minus 8250 and get tax payable? Understood? And there is no concept of that relief here. If your income is 5,01,000, you will not get rebate. Did you all get it? Clear? So this topic I hope is clear to you. Let's start with first head of income now. Salaries. Go ahead, give the heading. Income from salaries. Any doubt in the end? Please focus. We are starting with first head of income. Income from salaries. Pay attention. Charging overall, this falls in which section? 15 to 17. It is in sections 15 to 17. What is 15? Charging section. Section 15 says that any amount earned by payee. By whom? By payee. That is assessee. In relation of which relation? Employer, employee. So in short, for income to be taxed under the head salaries, there should be relation of employer, employee. Clear? So employer, employee relation is must. Salary will be taxable on due basis. What basis? Due basis or receipt basis. Due basis or receipt basis, whichever is, mind you, whichever is earlier. Salary is going to be taxable on due basis or receipt basis, whichever is earlier. Means what? What exactly I want to say? There is one Mr. A who received rupees 25,000 per month as salary during PY 24-25. Okay, also, you know what happened? Also in March 2025, he received advance salary. What he received? advance salary of 25,000 per month for April and May. For April and May 2025. Understood? So how much will be taxed now? How much will be taxed in AY? That's my question. How much will be taxed in AY 25-26? That is PY 24-25. How much will be taxed? The original salary for those 12 months. So first thing is your salary for 12 months. What is that 12 month salary? 25,000 into 12. 3 lakhs. Absolutely. Plus, exactly, advance salary. Why advance salary will also become taxable? Because it is taxable on receipt basis. Receipt has happened earlier, it will become due in next year. So of course, in next year again it won't be taxed. It would be taxed now. On what basis? Receipt basis. So advance salary of 2 months. Of 2 months. So isn't it 25,000 into 2? 50,000. So therefore, can you tell me what is taxable salary? Is it clear? Just mention there advance salary is taxable. Advance salary is taxable in PY 24-25 itself on dash basis, on receipt basis, being earlier than on receipt basis being earlier than due. Clear, no? Of course, it won't be again taxed in it won't be again taxed in PY. Yes, it won't be again taxed in PY 25-26. So far so good. I will introduce one twist now. Say it is not advance salary. It is advance against salary. Pay attention. Huh? Everything is critical. It is not advance salary. It is advance against salary. Then what will happen? Then it won't be taxed. Right now in 24-25 PY, it would be taxed as decided in PY 25-26. Advance against salary is like a loan. So just using the word against will change all the things. It will take the form of capital receipt, and capital receipt or loan taken cannot be income. Advance against salary means your employer is giving you loan, and for which afterwards he can recover money from your salary. So yes, technically it happens this. You can call it as advance against salary and prepone the taxation. Prepone nahi, postpone. If you say advance salary, taxation will be preponed. If you say advance against salary, taxation will be postponed. So right there, what would be your answer? What would be your answer if above rupees 50,000, which 50,000? 25,000 into 2. What would be answer if above rupees 50,000 is received as advance against salaries instead of what? Instead of advance salaries. So what will happen? It would not be taxed. It would not be taxed in PY. What? It would not be taxed in PY 24, 25. As it is a which receipt? Capital receipt. And to be very specific, it's like a loan. It's like a loan. And hence, not income. And hence, not an income. In PY 24-25. When it will get taxed? Note, when it will get taxed, tell me. Such rupees 50,000 will get taxed. Tell me friends, when it will get taxed? Shall get taxed in PY 25-26 as and when it becomes due. As and when it becomes due. So very simple principle, but you have to keep this in mind. Every head of income tax, every charging section will have its own way of taxing. Meaning to say, in salaries they will tell you when to tax. So they are saying when to tax on due basis or receipt basis, whichever is earlier. In house property again they will have their own way of charging to tax. You can't decide that. It is already pre-decided. It is pre-decided by charging section at what point to tax. Like there was time of supply in GST. You have to here check when income is accruing, when income is becoming due, when income should get taxed. So it is for salaries due basis or receipt basis, whichever is earlier. Another example. Mr. X has basic salary of say rupees 50,000 per month. Okay. For particular month, salary becomes due. Salary becomes due on last day of month. On last day of month, When salary becomes due? Usually it becomes due on last day of month, but it is paid. But it is paid on 7th. But it is paid on 7th of next month. Did you get it? It is paid on 7th of next month. So what will happen now? He joined employer. He joined his employer on 1st April 2024. What happened? Oh, he joined the employer on 1st April 2024. Compute his basic salary, taxable. Compute his basic salary, taxable. Did you understand the point? What will happen now? For April, it will be paid on 7th May. For May, 7th June. For June, 7th July. This cycle will continue. For March 2025, it will be paid on 7th April 2025. But you will tax it in PY 24-25 itself, because it is getting due. Because it is getting due in the month of March, that is in the PY 24-25. That's the point. So here, basic salary chargeable to tax for PY 24-25 shall be rupees. Yes, friends. Huh? 50,000. No? 50,000 into 12 equal to rupees 6 lakh. Important point to be understood was salary for March 2025. Salary for March 2025 is getting due salary for March 25 is getting due in PY 24-25 itself. Though payable in April 2025. Therefore, taxable on what basis? Therefore, taxable on due basis in PY 24-25. Clear? Gets clear? Got it? Done? Shall we go ahead? If I talk about now, salaries, the package which employee gets, that package is going to get divided. Like In monetary benefits, package will have monetary benefits. Allowances, perquisites. What all package is having? Monetary benefits, allowances, perquisites. SPF, RPF, UPF, and retirement benefits. So salaries will have these elements. This monetary benefits will always be fully taxable. Basic, bonus, commission, incentives, fees. These are what? These all are examples of monetary benefit. What will happen with them? Always and always fully taxable. Allowances. We will discuss them separately. We'll discuss them separately. Which retirement benefits? Leave encashment, gratuity, and pension. Clear? Till now I have not explained anything. I have just shown you elements. Allowances. Allowances are of two categories. They can be personal or they can be duty based. Personal can be divided in two categories. Personal can be divided in two categories. The one which are Duty based will be exempt up to amount spent for official purpose. Those which are others will become fully taxable. Allowance is money, so monetary things are getting fully taxable. But covered in section 10 are partially exempt. Okay. Giving you examples of duty based allowances. Say uniform allowance. Uniform allowance, helper expenditure allowance, traveling allowance. These are spent for official purpose. These are given for official purpose. They will be exempt to the extent amount spent for official purpose. Means, to give you an example, traveling allowance traveling allowance given to you is 1,20,000 during the year, less you spent for official purposes. Say you spend for official purposes 80,000, then 80 will get exempt. Taxable will be, yes, taxable will be 40,000. Exempt to the extent amount spent. What you save will get taxed because you're saving for personal benefit. So this is nothing but exempt. Clear to this? So this is very simple. Next, others are always fully taxable. Personal. Examples. 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 Medical allowance, pet allowance, tiffin allowance. These are just names. Anything you prefix the allowance, that will be personal, and personal will become fully taxable. Clear? Now what is this? So these allowances, these will get exemptions to the extent given in section 10. Which are those? House rent allowance, children education, okay, fine. So we will go in details of this in the next session. Thank you.